In the previous sections, you explored how brokers and salespersons organize a real estate brokerage, manage agents, obtain listings, market properties, and guide transactions to closing while staying compliant with law and policy. Business brokerage builds on those same skills, but adds an extra layer of complexity. Instead of just transferring real property or leasehold rights, you are transferring an entire operating business, income streams, personal property, intellectual property, contracts, employees, and sometimes substantial liabilities. In many transactions, you will still be handling real estate, so a real estate license is typically required. But to operate confidently in this specialty, you also need working knowledge of business structures, financial statements, valuation, and specialized regulations. This section introduces the core concepts of business brokerage and then compares them with another brokerage world you are likely familiar with as an investor or consumer: stock and securities brokerage firms. What is business brokerage? Business brokerage is the practice of effecting the sale or exchange of an existing business. In most cases, the sale of a business includes a transfer of real estate interests at the same time, either a fee simple ownership interest or a leasehold interest in the premises where the business operates. Because real property rights are often a key part of the deal, a business broker is generally required to hold an active real estate license in that state. Some states further classify business brokerage into two categories based on size and structure. Opportunity brokerage typically involves smaller businesses, such as sole proprietorships and partnerships. These deals often revolve around the sale of business assets and the assignment of an existing lease. Enterprise brokerage involves larger corporate entities, where the transaction might include the sale of stock and the transfer or assignment of multiple leases or owned properties. In both models, the basic brokerage flow is familiar. The broker secures a listing, markets the opportunity, procures a ready, willing, and able buyer, and facilitates due diligence and closing. Once the buyer is found and the conditions of the listing agreement are met, the business broker earns a commission. Business brokerage versus real property brokerage. The key difference between a typical real estate transaction and a business brokerage transaction is scope. In a standard residential sale, the primary focus is the transfer of real property and any agreed-upon fixtures or personal property. In business brokerage, you are dealing with the transfer of an entire operating enterprise. That includes real property or leasehold rights, but also business income, goodwill, trade names, licenses, equipment, inventory, contracts, and sometimes substantial short and long-term liabilities. Because of this broader scope, a competent business broker needs skills beyond those of a typical residential agent. They must understand how businesses generate income, how expenses behave under different owners, how to read income statements and balance sheets, what assets and liabilities are being transferred, and how the structure of the transaction changes the risk for buyer and seller. They also must know when to bring in and rely on the client's professional team: attorneys to draft and review specialized documents, accountants to analyze tax consequences, and appraisers who can value not only the real estate, but the business as a going concern. A wise broker understands their role is to coordinate the transaction and protect their client's interests, not to practice law or public accounting. Transaction knowledge: asset sale versus stock sale. In business brokerage, there are two main transaction structures: the asset sale and the stock sale. In an asset sale, the buyer purchases some or all of the business's tangible and intangible assets, along with any associated real estate or lease assignment, but does not acquire the existing legal entity. The corporate shell, existing corporation, or LLC, and its historical liabilities usually remain with the seller. Asset sales are often preferred by buyers who want to choose which assets and obligations they are assuming and who wish to avoid unknown legal liabilities associated with the entity's history. In a stock sale, the buyer purchases the ownership interest in the company. For example, 100% of the corporation's shares or membership interests, thereby acquiring the legal entity itself. The entity continues uninterrupted, but with a new owner. This means the buyer acquires all assets, all known liabilities, and any unknown or contingent liabilities that may arise from past events. Buyers sometimes prefer stock sales to preserve contracts, licenses, or brand identity that are tied to the existing entity, or for favorable tax treatment. Stock sales can also keep the business's identity, history, and relationships intact, which can be very valuable where reputation and continuity matter. Typical business brokerage transaction documents reflect this complexity. A comprehensive sale contract defines exactly what is being sold: assets, stock, intellectual property, contracts, and real estate. A separate real estate purchase or assignment agreement handles fee simple property or leases. A no-compete agreement compensates the seller in exchange for a covenant not to compete with the buyer for a defined time in a defined area. A consulting agreement may retain the seller for a transition period so they can train the buyer and introduce key customers and vendors. Because these documents are not fully standardized and often highly customized, the business broker must be extremely careful not to draft legal language beyond their authority. Instead, they coordinate with the parties' attorneys and ensure all agreed terms are captured accurately. Accounting basics for business brokerage. To value and market a business effectively, you must be able to read and interpret basic financial statements. Two are especially important: the income statement and the balance sheet. The income statement summarizes the company's revenues, expenses, and profit over a specific period, typically monthly, quarterly, or annually. The broker must understand not only what the business earned in the past, but how those earnings might change when a new owner takes over. For example, some expenses may disappear if the seller's salary will no longer be paid. Other expenses may appear or increase if the buyer must hire staff to replace unpaid family labor. A store that looks profitable on paper may be much less profitable once fair market wages, benefits, and professional management are factored in. The balance sheet shows what the business owns and owes at a point in time. Assets on the balance sheet include both tangible and intangible items. Tangible assets are physical or financial items such as cash, marketable securities, inventory, trade fixtures and equipment, real property, and accounts receivable. Intangible assets include the company name, trademarks and copyrights, licenses, contracts for future sales of goods or services, and goodwill. All of these play a role in determining what the business might be worth to a buyer. Business liabilities in a corporate stock sale include both short-term and long-term obligations. Short-term debts might include lines of credit and accounts payable. Long-term liabilities include mortgages, equipment loans, and lease obligations. In a stock sale, the buyer takes on all of these obligations as they step into the shoes of the prior owner. Understanding goodwill and business value. Goodwill is a critical but sometimes confusing concept in business brokerage. In one everyday sense, goodwill refers to the intangible qualities that make the business attractive and successful beyond its physical assets. This may include a strong brand and reputation, a loyal customer base, prime location, long-standing relationships with vendors, favorable contracts, unique processes, or a dominant market share. These factors are real but difficult to measure precisely. In the stricter accounting sense, goodwill is the difference between the price a buyer agrees to pay for a business and the fair market value of all identifiable tangible and intangible assets. If a business's physical and identifiable intangible assets are valued at $80,000 and the agreed purchase price is $100,000, the difference of $20,000 is recorded as goodwill. This amount reflects the premium the buyer is willing to pay for the business's earning power and intangible advantages. Whether using the practical or accounting definition, goodwill is a reminder that business value is not just about hard assets. It is about income, reputation, risk, and opportunity. Determining a price for the business. One of the most challenging tasks in business brokerage is establishing a realistic price range. Owners of small or closely held businesses often build their companies from scratch and naturally overvalue their life's work. They may also have incomplete or informal accounting records. So income, expenses, and asset values may not be clearly documented. On top of that, the true economic performance of a business can vary dramatically depending on the owner's skills, relationships, and work habits. Despite these challenges, a business's value is generally grounded in several key factors. Past, present, and projected future net profits are central, often expressed as a capitalized income stream or an earnings multiple. The level of risk and certainty associated with realizing those future profits must be considered. Stable, predictable earnings with diversified customers are worth more than erratic income tied to a single client. The value of tangible and identifiable intangible assets as reflected in the books is also important. The impact of goodwill, market share, and brand strength must be weighed. Prices paid for similar businesses in the same industry can provide useful benchmarks. Finally, all other risks, such as regulatory changes, competition, loss of key staff, or technological disruption, must be taken into account. A business broker's role is to gather this information, analyze it in a systematic way, and help the owner see a realistic price range, rather than a purely emotional number. Just as in residential real estate, the market ultimately decides what a buyer will pay, but a well-reasoned valuation positions the listing to attract serious, qualified buyer. Business brokerage regulation. Because business brokerage deals with both real property and, in some cases, securities, it sits at the intersection of multiple regulatory frameworks. First, a business broker generally must hold an active real estate license if any real property interest is being transferred. Second, because some transactions involve the sale of stock or membership interests, a securities license may also be required depending on the structure and the state's securities laws. Knowing when to involve a licensed securities professional is an important part of operating ethically. The Uniform Commercial Code, UCC, governs many aspects of personal property transactions, including security interests in equipment, inventory, and receivables. Standardized documents, such as promissory notes, security agreements, and bills of sale for personal property, are rooted in UCC principles. A business broker should understand how these documents work, even though they should not draft complex legal instruments without counsel. The Bulk Sales Act, or bulk transfer laws, is designed to protect creditors when a business sells a substantial portion of its inventory or assets. If a business sells more than half of its inventory to a buyer, that transaction may be classified as a bulk sale. In such situations, the seller must disclose the names of creditors in a bulk sales affidavit, and the buyer must notify those creditors of the impending sale. This process allows creditors to take action to secure their loans and prevents owners from quietly selling off assets and disappearing with the proceeds. A business broker must be aware of these requirements and work with the party's attorney to ensure compliance. Securities brokerage firms versus real estate and business brokerage. While business brokerage focuses on buying and selling operating businesses, another kind of brokerage you encounter in your financial life is the stock or securities brokerage firm. These firms are financial institutions that help investors buy and sell securities such as stocks, bonds, and mutual funds. They stand between buyers and sellers in the securities markets and charge a commission or fee per transaction. Understanding their basic types helps you see how brokerage can look very different depending on what is being brokered. A full-service brokerage firm offers a wide range of services in addition to trade execution. Clients may receive financial planning, retirement planning, portfolio management, trust services, and personalized advice. Full-service firms typically allow orders to be placed via phone, online platform, and sometimes smartphone apps. But phone orders with live broker assistance can carry additional service fees. The higher level of advice and relationship management is reflected in higher overall costs. A discount brokerage firm historically offered trade execution without personalized financial planning. Many modern discount brokers supplement execution with online research tools, articles, and screening software, but they still do not provide customized, one-on-one financial advice in the same way a full-service firm does. In exchange, commissions and fees are significantly lower. Clients can usually place trades online or by phone and may have access to smartphone trading apps. An online brokerage firm is one that provides its services primarily or exclusively through the internet. Some are standalone, online-only companies with no physical branches. Others are the online, self-service arms of larger full-service or discount firms. Online brokerages offer the lowest cost access because you place trades yourself using their platform at any time of day, with no individual advisor involved. These platforms often integrate research tools, charts, and educational content, but the client is responsible for interpreting that information and making decisions. For a tech-savvy investor who prefers independence and low costs, an online brokerage can be ideal. For someone who wants tailored advice and personal guidance, a full-service or hybrid model might be a better fit. Just as in real estate, the type of brokerage firm that is best depends on the client's needs. A small business owner selling a company might need the hands-on expertise of a business broker who understands valuation and local market conditions. An individual investor like Eddie, in the example, might choose a low-cost online securities brokerage because he is comfortable doing his own research and wants 24/7 access and control. In every case, the core brokerage function remains the same. Connect buyers and sellers efficiently and transparently, while providing a level of service and expertise appropriate to the client's goals. Review summary. In this section, you expanded the concept of brokerage beyond typical residential transactions and into the world of business brokerage and financial brokerage firms. You learned that business brokerage involves selling entire operating businesses, not just the underlying real estate, and that this requires understanding asset sales versus stock sales, specialized transaction documents, and the need to coordinate closely with attorneys and accountants. You saw how reading income statements and balance sheets helps you evaluate profitability, assets, liabilities, and goodwill, and how goodwill can represent both intangible strengths and the premium paid above identifiable asset values. You also explored the difficulty of pricing a business fairly when owners may overvalue their life's work, and records may be incomplete. You learned that business value depends on past and projected net profits, risk, documented assets, market comparables, and a realistic assessment of goodwill. You reviewed regulatory frameworks, such as real estate licensing, securities laws, the UCC, and the Bulk Sales Act, and saw how they protect both parties and creditors when a business changes hands. Finally, you compared real estate and business brokerage to securities brokerage firms, learning the differences between full-service, discount, and online brokerage models, and how each serves different investor needs. Discussion with answers. Why does business brokerage usually require more specialized knowledge than a typical residential real estate transaction? Answer. Because the broker is not only transferring real estate or leasehold rights, but also business income streams, tangible and intangible assets, and potentially significant liabilities. Evaluating these requires familiarity with financial statements, business structures, goodwill, risk assessment, and specialized regulations, as well as coordination with attorneys and accountants. How does the choice between an asset sale and a stock sale change the risk profile for the buyer? Answer. In an asset sale, the buyer typically acquires selected assets and may avoid many historical liabilities of the seller's entity. In a stock sale, the buyer acquires the corporate entity itself, and with it, all existing and potential liabilities arising from past operations. This can preserve relationships and contracts, but increases legal and financial risk if issues surface later. Why is goodwill often a point of negotiation in business brokerage? Answer: goodwill represents both intangible strengths, such as reputation and customer loyalty, and the premium a buyer pays above the value of identifiable assets. Because it is harder to quantify and closely tied to future earnings and owner relationships, buyers and sellers may see its value very differently and must negotiate how much of the price is justified as goodwill. What parallels exist between choosing a real estate brokerage and choosing a securities brokerage firm? Answer: in both cases, clients must decide how much advice, support, and personal service they want versus how much they are willing to pay in fees. A full-service firm offers more guidance at higher cost, while discount or online models offer lower cost and more self-service. Clients should match the level of brokerage support to their experience, comfort level, and goals. Closing remarks. Business brokerage adds a new dimension to your understanding of brokerage practice. You are still connecting buyers and sellers and guiding them through complex transactions. But now the subject of the sale is a living business with employees, customers, contracts, and history. When you combine your real estate skills with a solid grasp of financial statements, valuation, and regulatory requirements, you become a powerful resource not only for property owners, but also for entrepreneurs ready to buy or sell their companies. As you continue through the course, you will see how these advanced brokerage concepts tie back into risk management, ethics, and the legal duties that protect both you and your clients in every transaction.